Welcome to TradeTheMBI.com. This is Jonas Report. It's for the 12th of December. Pretty deep move that started with the post FOMC, and the expectation is a lower move after the initial announcement. But they brought it all the way back up and actually finished positive. Not so much on the Nasdaq, but that's the bifurcation that we're starting to see here. Interesting that we're starting to see a gold rise of shakeout. So that suggests that we should break the new highs from where we're at, which is an interesting read, given what you're seeing here is actually the opposite from a NASDAQ standpoint. Much softer readings. We did not get a dip below the red line, so that's bullish in general, but we still haven't seen the impetus push from an excitement. And a lot of that is just because there's still a lot of uncertainty. The Fed being late to this game, not a surprise to anyone that follows what the Fed does, but that there were so many that were really not interested in any kind of movement was interesting to me because I think that just shows that they really very confused about what they're seeing out there and what they think the prospects are. They think things are a lot better off than the numbers would suggest otherwise, but they think they've got it right. Of course, they've been wrong historically now for what more than a half decade. From a Treasury standpoint, not much movement there. That's what always interests me that people would still listen to them after being so wrong for so long, so many times. It's an interesting one. From an oil standpoint, we're at the bottom side of it, and we're getting close to that threshold where I think things get interesting, and it'd be perfect timing because you'd start the new year where energy prices are relative low. But I still think that bifurcation you're seeing with AI, electricity prices, and the demand is not changing in a lot of areas where AI is strongest, and I think that's really going to become problematic. There's just no possibility of them meeting the energy demands that they think must come from AI. And this is sort of like the opposite of where we were with your Broadcom, and then back then when they had fiber optic and all the cable they were laying for internet, and there just wasn't enough people. But now you've got the reverse situation. You've got more demand on power than exists, and so they couldn't do it. They've chosen policies that prevent it. This has caused a big boon for the euro because everyone's so excited that the euro is going to be continuing their war efforts, moving more in that direction, and they're going to spend all that Russian money. So they're very excited about that one. But this is where we didn't have any shock whatsoever. We expected gold to explode, and it's going to continue because there's not going to be any change. The gridlock in Congress and that, you're going to have spending that's through the roof. You're going to end up with a whole other budget battle at the beginning of the year. Blah blah blah. Same old story, just recycled. From a crypto standpoint, though, it's still caught in its malaise here, and this is just going to trade across. You have the MBI white here suggesting that any slight breakdown here of that magenta, and you're looking at a retrace back down to the zero level. So that's problematic. When you look at that shakeout, this is not a healthy situation in the crypto markets at all. So a lot of distribution going on there. ETH, though, considerably different when you look at it from that perspective. We still get the same kind of readings, but when you take a look at that shakeout, you can see there's much broader improvement and much healthier state. So that's part of that shift that's going to be, what are the practical uses? And that's always been the case. Nothing's changed since, 2016 when they put the ETFs out for Bitcoin, and that, will you ever convert to a utility where it can actually be functional? And it's been slow, mostly third world, which is interesting too. From a 50K standpoint, you can see this was that huge dip that took place pre-market. And from there, it kind of worked its way through. And then by mid-morning, was pretty good shape. And then you had the magenta over, and then you ended up with this beautiful one here where the MBI white spikes, but magenta comes back above. And right at that particular point, there's your short cover rally. And that's exactly what that was going into the close, was a nice short cover rally that was very effective. Pushed it to new highs. 5-minute chart, very erratic, and this is part of that transition rollover. People just aren't quite sure which is the best thing to be in, which ones have gone too far, take some gains from, and shift into the next area. You can see from a immediate move into the Asian session was a big drop off from that higher moves, which basically eliminated that entire positive extreme run. And that's what happens in short covers rallies. They just get wiped out pretty fast. Nothing really dramatic took place in the Asian, but now you can see in the European session, softness is growing and growing quickly. A lot of this is going to be the geopolitical aspect of it. Are we going to continue to see more, drone attacks on commercial shipping? And then is that going to be a whole new kind of warfare? And that can get out of hand very ugly. I mean, this is basically piracy on the high seas with drones, and you're starting to see the potential scary scenarios of what the new technological world is going to look like from a warfare standpoint, and anyone can participate. The threshold to enter is not very high, and that's going to make things interesting all the way from the Persian Gulf all the way through into obviously the Baltic Sea now and other areas. So we'll definitely be following that one because that could have a major disruption on a lot of things. As always, anything relevant, I'll put on the team chat. Have a good one. Trade well.